Welcome to the Wealth Studying Podcast. This is episode 479. Today is July 14th, 2025. I'm your host, John Pugliano. I'm also the founder, money manager at investablewealth.com. In today's episode, I'm going to talk specifically about the stock Budweiser, but more broadly, I'm going to be covering a crucial investing question, which on the surface seems very simple, but in my opinion, it's so much misunderstood by people. So the question I'm going to ask is, why do you buy a stock? Or actually, let me step back. I'm going to tell you why I buy a stock. And let me illustrate it this way. So someone notices that I own Budweiser, that stock is in my portfolio, and they say, John, why do you own Budweiser stock? So I went through the fundamental reasoning, the stock charts where I thought technicals and such were. And when I got done with that, what I thought was a very thorough explanation, they still looked at me and said, but John, you don't drink alcohol. And there lies the problem that I think that most investors have, is they get wrapped up in buying a stock that maybe they like the product or they like the CEO or they feel some kind of affiliation with the company, or the corollary to that is they don't have an affiliation with the company or they don't like the product. So maybe you don't use tobacco products and you don't want to invest in tobacco companies. Well, again, you're right. That's what you would choose to do. Me personally, I don't use tobacco products. I've never had a problem buying and selling tobacco stock companies because the reason I buy a stock is for one reason and one reason alone. And that's because I think that in the future, it's going to have price appreciation and I can sell it more in the future than I bought it for in the present. That's it. I do my best to take my own personal preferences for products and ideology and morality and politics and everything else and remove it from the equation. And while that may sound mercenary to some people, the fact of the matter is that you buying or selling, or again, I'm not talking about you, me buying or selling a stock has no social impact. If I buy a tobacco stock, it isn't going to make kids go out and smoke more cigarettes. Now, you can think otherwise, but you'd be thinking wrong. Buying a stock is not like buying a product or service. Companies make profits by selling products and services. They stay in business by being profitable. So a boycott of a product or a service is a very effective way to show your disdain for a particular company, because it does impact their bottom line. In terms of buying the stock or selling the stock, divesting from the stock, it has no bearing. It short-term may affect the price of the stock. But long-term, again, look throughout history at whatever divestiture you want to look at, it doesn't have any impact because all it does is drive the valuation of that asset down, and it encourages other investors to come in and buy it at a better price. Look at tobacco stocks in the 1990s. There was a huge divestiture movement. It did impact the tobacco stocks for quite a while, but let's fast forward 35 years. You know what? It hasn't made a difference. The profitable tobacco companies are still in business, either publicly held or privately held, and really the biggest beneficiaries of the divestiture movement, which I would say in most cases is always the biggest benefactor, and that's the state. You saw that with tobacco stocks. Even in recent years, you've seen that with the movement away from fossil fuels. There's this supposed grassroots effort to divest from a particular asset class because it'll have some type of a social outcome, and I'm not saying the social outcome isn't good. I mean, getting people not to smoke cigarettes is a good thing. But the divestitures, again, if you study them, you'll see really the biggest benefactor becomes the state. After the state has made that item a boogeyman or a scapegoat, they just raise taxes on it. So today, who makes the most money from tobacco or oil? Well, it's not the tobacco growers, it's not the oil exploration companies, it's the state governments that charge taxes on those items. But I digress. Do your homework and look at it. When you buy or sell a stock, or again, when I buy or sell a stock, I'm not doing it through an IPO. I'm not doing it through a secondary offering. I'm buying it through my discount broker. That's on an open exchange. The money that I buy that stock with does not go to the company of the underlying stock. It goes to whatever other individual or institution owned those shares. They're publicly traded. They're on a secondary market. It's no difference that if you go to a store and you buy something for $5 and you hand the clerk a $10 bill, they give you $5 back in change. It's irrelevant where that $5 came from. Whether it was just previously used for some kind of illicit activity or whether it was raised by the government taxing people's wages, things you may or may not agree with, it doesn't matter. You're simply taking that $5 because it's a transaction. That's not only the way I look at stocks, but that's the way the legal system itself looks at stocks. When I own a stock, if that company would do something illegal, the government has no recourse to come back to me and press criminal charges on me because the management of the company that I own did something illegal. The price of the stock could go to zero, but the government can't criminally prosecute me for owning the company because I have no say in the operation of the company. I simply own a share of that company, a transaction. Same way with civil judgments. If a company is found liable for something they did, as a shareholder, I don't have to worry about carrying an umbrella policy to protect my assets because I can't be sued for a publicly traded company that I own stock in, even if they were negligent and caused problems. Again, the price of the stock can go to zero, but I have no legal or civil liabilities. I would make the argument that I also have no moral or social issues by owning a stock. It's simply a transaction. Now, I know a lot of people would disagree with me, but hey, that's what makes markets. I look at it as being part of my responsibility to properly manage not only my own wealth, but also money that my clients have entrusted with my firm to invest for them. It's my fiduciary responsibility to do my best to make them more money and not to make social or moral judgments. Real quick, I'll finish up on Budweiser. As I mentioned, boycotting of products and services is effective. And you can see that in the very successful boycott of Budweiser stock, which occurred, it started in early 2023. It had a major impact on the sales of Bud Light. The stock traded sideways for a long time. To me, it looked like it was building a base and had been consolidating last summer around its 200-day moving average. When I did the analysis, not only from the chart pattern, but also from the profitability standpoint, it to me looked like effects of the boycott had pretty much run their full course. I bought into the stock last summer. Following the election of Donald Trump, the stock actually really fell apart. I think people thought that was going to drive the boycott further. Like most things, it was actually a buy the rumor, sell the news type event. And pretty much ended 2024, beginning of 2025, the stock put in a bottom. Year to date, it's done incredibly well. It's up like 35%. Now, I bought it last summer, so I'm not up that much. I'm up maybe half that. And I actually had thought about selling it because it isn't really one of my core holdings. As you know, if you follow me, my core holdings are related to industrial digitization and the industrial tech revolution. Purchasing Budweiser stock last year was simply just a target of opportunity. I do plan to sell it sometime in the future, but not right now, because as I look at its fundamentals, if in fact the forecast for its profitability and growth really pan out, then it's looking at growing profitability at about 10% a year, and the valuation is under 16 times. So given the size of the company and the cash flow that it spins off, I think it still has a lot of upside opportunity, and I don't plan on selling it anytime soon. So hey, again, that's just my way of thinking of things. Is it too mercenary for you? Perhaps, but that's the way I invest. Hey, as always, until next time, this is John Pugliano wishing you the very best returns.